Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar closed out a negative week after posting its second consecutive bearish day. And from that, the market crushed the 60-day moving average and now reinstates a bearish case and views the next target as 65.1995. Meanwhile, the dollar index, which measures the greenback strength against a basket of six major currencies, rallied further and now reaches its objective of 102.5060 and now puts further views ahead of the market this week that we could see 104 if we see a clearance of 102.60. In this week's economic data, we get the release of the Reserve Bank of Australia's RBA minutes. Along with that, we get the wage price index and also the employment change. While overseas, the US will release its retail sales, and along with that, eyes will look towards US Fed Chairman Powell when he gives his speech titled Perspectives on Monetary Policy. Any advancement views the 60-day moving average, of course, around the level, if I just click on, seen around 66.90 as a probable weak challenge, and therefore maybe even see a rejection again from there and see the downside challenge. Now, if we see a break of 65.90, this would give further risk to the downside, that is, into 63 cents as the next call. Viewing the euro, the market crushed the level of 109. As I mentioned, the dollar index surged to 102.5060. And now for the euro, exposes the region of 107 and reassess from there. Looking at the technicals, the ADX is bearish. Along with that, the RSI and the MACD is also supporting this. So therefore, limits any gains beyond 108.85 to 109.15. And as I mentioned, with the top side crushed at 109, reaffirms the downside to 107. But the dollar coverage in its bullishness and now has further increases to the upside if we clear 102.60. The dollar yen, the case is back to 137, 138, and from the recent downside challenges appears to have formed a base close towards that 133 area. In light of the pattern, the bulls are coming back and therefore should limit any pullback and furthermore see an uptest to 136.20 to 136.60 and then the objective of 137.80.95. Since the Bank of England's widely expected rate hike of 25 basis points to 4.5%, the market has been somewhat weak and now crushing the level of 125 exposes the next area, seen roughly around 123.80.85. With little upside expectations for the start of this week, the market will most probably weigh on the support. Finishing up with gold and oil, well, the market posted a relatively weak close and now furthermore puts the downside challenge in view of 1,994.96. Any upside attempts should expect and failed beyond 2019 with 2027 to 29 as a cap. Reassess from 1,994 as we could see an extension down to 1,978. And oil posts another weak session and reaches its objective of 69.80. This is now viewed as a possible extension to the next target of 66.70.90 and reassess as the dollar strengthens. Well, that's a wrap for the day. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to a new week.